who's live in our Melbourne studio. Markus, a very warm welcome to you. Thank you so much for joining us. Now, as we know, it's been all about the US dollar move overnight in response to President-elect Donald Trump's comments there. And really, I suppose, you know, lifting the Aussie dollar, and that's also helping to lift these commodity prices more broadly. What are you making of the moves?
Well, hi, Leanne. Look, really, the overall US dollar run is now in its 8th year, which is historically normally quite an expanded type of a rally scenario in any currency, in particular the main one, the US dollar. So, look, really, we think this is the final hurrah of the US dollar, and it might last for the better part of this year. It might peter out over the next 6 months. I think individually in a moment, if you look at the Aussie dollar, for example, it's obviously strongly supported by the terms of trade that has been massively boosted by iron ore and coke and coal doing what they've done over the last 4 or 5 months. We really believe this probably, as long as iron ore stays between $70 and $80 a tonne, which we think has got a fair chance to do so in the next 3 to 4 or even 6 months, will basically be an ongoing support on the terms of trade together with coke and coal, which we think will hold up in this broader 15–20% range as well. So, look, generally, as we said a few months ago about the Aussie dollar, we're actually a lot more bullish than many others. Mind you, we had a bit of humble pie with the correction of 77 to 72. However, our broad technical and fundamental view remains, as long as China is nothing really upsets, gives us any big upsets out of China, we think the Aussie dollar will retest 77 cents against the US dollar soon enough. Ultimately, we have a target range over the next 12 months between 72 to 82, with the risk to the upside for many reasons. And I think the US dollar in itself is the reason we believe this whole bull run, as I said earlier, could run out of puff sooner rather than later, giving underlying support to currencies like the Aussie dollar even more.
Just around your comments on iron ore there, you mentioned that, look, it could be well supported here. China's obviously continuing to import high-grade ore from us here in Australia, and obviously still supporting their steel industry over there. So I guess we do have that underlying support. Australia, though, I mean, the longer-term outlook from, you know, the government is that we could see those prices falling back towards the $50 level. Do you think, I mean, we are due for a pullback? $80, it looks pretty toppy at these levels.
Very much so. And as I said last week, I think this is as good as it gets. This is a bit of a Goldilocks revisited. And sometimes good news can last a bit longer than we think, and hopefully they do so. But look, as I mentioned many times, the actual backwardation, which is the difference between your spot price in iron ore versus the forward prices 1 year out, are currently at $18, which is a massive backwardation. So there's a lot priced in the forward prices for the forward hedges of ureas and BHPs. So that's already sort of built into the forward prices. However, if, as I said earlier, China remains a status quo as is, you'll find there is not yet any main reason to see a major sell-off. On top of that, the Trump factor is your big unknown and your big risk, and ultimately that might well be one of the triggers that will ultimately be the end of this particular run.
Can we talk gold? Because obviously the Trump story plays into this very much. And we saw, I suppose, that uncertainty on how the incoming US administration will implement its plans. That was very much reflected in the gold price overnight. I think it soared to a 7-week high. We've spoken to you a lot about gold. I know that you do like it. But with all of this uncertainty in sight, would you be a buyer of gold?
Well, absolutely. To me, actually, the whole last 12 months technically is an ideal setup. I heard earlier that by some comments that maybe the technical picture might not be as clear. Well, I guess we put one chart in front of 10 people, you get 10 different views. Our view on the macros is that the whole setup of the likes of platinum, gold and silver over the last 12 months, after the 4-year correction we had in gold, silver and platinum, the bottoming out process of the last 12 months is an ideal technical setup, as a matter of fact, and we just ended up and doubled up all of our holdings in related gold stocks and physical gold and silver. We also added on investments and shareholdings in gold junior ETFs. We could basically buy signals all over the place in the precious metal sector, and that, if you compare that, coming back to the Aussie dollar, has a little bit of an overlay there, and you'll find if we do see platinum again close above $1,000 an ounce over the next 4 weeks, which we expect, and gold above 1,200, 1,220, and we're already quite close. That's against the US dollar. Now, I really believe there could well be an underlying support also for the Aussie dollar. But generally, when I look at gold, silver, platinum, technically, fundamentally, this is now an absolute must-buy if anyone is not in there yet, or a double-up for someone who has current holdings. We think this is the beginning of a major move. It might take years, but who cares, as long as you buy it at a good value and have a great diversification to your traditional assets, which we believe will have a major peak coming up this year.
All right, fantastic. I might just get a thought off the back of those comments from my guest host, David. Just a thought from you. Would you be a buyer of gold stocks?
Well, I was a buyer of gold stocks in August last year, so I've done very well in that sector, and I'm still holding. I'm taking some money off the table. Ramelius was one of my top buys. That went from 11 cents to, it's trading around, or hit about 65 cents recently. And, I'm still holding gold stocks. And, look, I agree with Markus. In the long-term picture, look, I like gold. Short-term, on the technicals that I've been watching here, I mean, if you look at the price of gold and the technicals going back on the chart here from early January 2013, gold has been in a really broad range between 1,400 and it got down as low as 1050. Now, it pulled back to that low about 1130, and it's had a rally to with this resistance level of 1,200, which was a pretty strong support level before. So it's got to break convincingly above 1,200 to get back up to maybe those recent highs around 1,350. But on the technicals, it's going sideways. It has been going sideways for the last 3 years, since 2013. To get really bullish on gold, it's got to break 1,400. Now, for that to happen, you've got to see a collapse in the US dollar. I can't see that happening just yet. Down the track, it all depends on the Trump policies, and who knows. But this will be a safe haven play. It depends what the central banks do. I mean, there's so many ifs and maybes. But from a technical perspective, they're the levels that I'm watching. Is like the upper level is 1,400. Could gold get back there? Absolutely. But it has to break convincingly above that upper level. But in the meantime, it's got to deal with the 1,200 level here. If it fails here, could pull back, test those previous lows, and then we'll see where it goes from there. But it's in a sideways trend and has been for 3 years.
Martin, are you as bullish on the outlook for gold? Would you?
Yeah, look, we see gold as something that you trade as opposed to own. So we think now the risk-reward favours gold stocks. So we've added Northern Star to our model portfolio, but we could have easily added Evolution or Newcrest, the other two stocks that we cover. And it's really there to hedge against the 3 a.m. tweet, right? So if and when Donald Trump tweets something crazy at 2 a.m. or 3 a.m., which he will do in the next 12 months, you're going to want some gold stocks in your portfolio.
Yeah.
And the other factor is, look, Aussie gold producers, I mean, at $1,600 Aussie, if you're producing at 1,100 or sub 1,100 or in sustaining costs, I mean, they're making $500 an ounce right now. So that's very profitable for the gold sector. That's why I still like it. And those that you said, those, even though it's one of the big boys, I mean, I like Evolution in particular. Saracen is another one. There's the whole host of them. So I do like Aussie gold producers and the margin they're getting, which is better than 30%. So it is a space that I like. But I'm just talking about the technical. So even though the US dollar gold price has moved up, you see the Aussie dollar's moved up. So that sort of offsets it a bit. But 1,600, hey, Aussie gold producers are earning a lot of money. They're very profitable.
All right, Markus, I just want to get back to you and just switch focus for a moment and get a thought from you on oil, because we are watching those energy prices moving up. Signs of support, I guess the market, getting in these indications from Saudi Arabia and Russia that they will be complying with these production cuts. That's what it's about at the moment, whether they will in fact stick to that agreement. Do you think they will, and where do you foresee the oil price moving?
Well, yes, I think they will to a large extent because simply they have no other choice. I think there obviously will be the odd one out. They will obviously not stick to it. I think it's just yeah. So basically, I think there's going to be an underlying support for the oil price. I can't see it run away at this point in time. So we give it still a $50 to $60 range over the next 3-4 months. It might even be a $45 to $60 range. I mean, it's interesting to note that you had a rising stocks in the US, mainly due to imports, and on the back of this news, the oil market actually bounced last night. So look, generally, I think it's well supported, between $48 to $50 on West Texas Intermediate crude, and we think that at some point by March, April, when we have a clear picture of the S&P and the stock levels in the US, you could see oil move towards $60. We might have a $55 to $65 range between March and September. Hence, buying the likes of Santos and Woodside and holding that makes sense. And they will perform, in our view, over the next 12 to 18 months, potentially quite strongly when you look at Santos.
All right, fantastic. Well, we might leave things there, Markus, but it's been wonderful having you on. Thank you so much for joining us.
Thanks, Leanne.